Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. An indecisive doji cross yesterday as the market found yet further indecision as it was being squished by the two downtrends overhead. That's of the 2008 to date move, currently at 122.33, and a 2011 to date move, currently 122.44, and by below the lower bull channel line, currently at 121.79. Now this recent jumble of action and reactionary moves may be coming to a cusp soon, as the space for manoeuvre is now very, very limited. In anticipation of this and the possible subsequent consequences, I've decided to remove the provisional target X for the morphing bull flag pattern I had. That's above in the 124.35 area. Overall, further below, we have the interesting support from the March 2018 low at 121.52. Now, so far today, a cautionary further dip lower, testing the lower bull channel line, but then pulling back up and looking like an indecisive doji cross right now. Cable, aka sterling against the US dollar. I've got actually quite a lot to write about this and speak about this. This market makes me laugh sometimes. I've complained last week and earlier this week about the countering nature of the intraday moves and the indecision evident here in this market. Then, 2 days ago, we saw what looked like a true move in a direction, lower in this case, which I celebrated as the market finally making a choice. Okay, so what does the market do yesterday? It makes a reactionary key reversal up. Ha! You may wish to take that on pure face value as a strong bullish move. However, I would urge caution, as this just looks like a possible reactionary move, further evidence of indecision on an intraday scale. All this really shows is something I've been harping on about for some time now, that the current bullish forces, evident since September of last year, have battled and rubbed up against the latest challenge overhead, and that's the trio, originally, of overhead resistances at 140.75, 141.43 and 142.43. The one that is still left above is seemingly the most intransigent, the March 2018 high at 142.43. And we are still tantalizing close to the preliminary target X in the 142.45 area. That's for the double bottom pattern formed since mid-March. A full target X1 for the pattern is in the 143.30 area. Overall, the market continues to travel between the lower time below, currently at 138.83, together with its long-term partner, the medium moving average, currently at 138.74, whilst above we have the middle time, currently 143.42. Both tines are from the June to September 2020 bullish shift pitch walk. Please always remember, this pitch walk has given the bullish angle attack of this market since September of last year. As a postscript, the latest move up can be traced back to the weekly key reversal up made 3 weeks ago. So far today, a small reactionary dip lower, away from the overhead 142.43 level, but holding off testing the 141.43 level as yet. Actually looking like an indecisive doji cross as well. Euro sterling. Second bearish black crow yesterday and a suitable follow-on to the previous session's bearish dark cloud cover pattern yesterday. Indeed, so suitable that it has set the scene for this week's possibly being a weekly key reversal down. If we close tonight either over 86.30 or under 86 even, then we'd be on. Right now we're close, but still looking like a weekly key reversal down. Overall, as I've mentioned before, we have overhead the April 2020 low at 86.69 and now the rapidly descending medium moving average currently 86.74 capping the market. Meanwhile below we have the extension of the flat trend line from the March base descending triangle at 85.45, and in between we have the short medium moving average currently at 86.20. Now, I've spoken for a while now about a new smaller pattern emerging, a possible small bear flag over the last 2 or 3 weeks. Nothing is for certain as yet, And yesterday's action, even as bearish as it was, hasn't triggered it as yet. But I still think it is worth considering, enough that I've decided to place a preliminary and provisional target X in the 85.20 area, just in case. So far today, a further small dip, but then a pullback, though that hasn't been big either. That's all quite small. US dollar against the Indian rupee. A rejection yesterday of the previous session's hammer pattern. Instead, yesterday we had a lower, significantly lower, indecisive spinning top. The market was explicitly bracketed by the two uptrends I've recently mentioned. Overhead, the broken 2018 today uptrend currently at 72.78, and below by the 2020 today uptrend currently at 72.51. The market opened and closed just over the repeatedly mentioned 50% Fibonacci line, the July 2019 to April 2020 move at 72.64. This 50% Fibonacci line is important. It is the gateway to a congestion zone down to the February 2020 high at 72.05, and the market has started to penetrate it. So far today, well, a slightly lower open and what looks right now like a bearish opening black Mariposa, having penetrated the 50% Fibonacci line, the lower broken uptrend, the September 2019 high at 72.41 and its associated congestion, and almost all the way down to the low of this year at 72.26. US dollar against the Brazilian real. Now, I told you yesterday this indecision was getting silly now. This is after a fifth countering bearish double on Wednesday. We yesterday had a seemingly definitive move lower with a bearish black Mariposa, almost an open and close one. This supports the idea I recently put forward of a potential bear flag formation formed over the last 3 or 4 weeks. There's enough here now to place a possible target X2 below for this pattern in the 508.40 area. I will also still keep, for the moment at least, target X1 below, a possible full target for the recent sideways triangle at 513.80. Meanwhile, overhead, we still have a trio of resistances. The recent 50% Fibonacci line at 544.41, the medium moving average currently at 547.01, and the long moving average currently at 543.51. Though they are now actually separating and thus reducing their overall combined power. I would add one final postscript. We're not that far from making a possible weekly key reversal this week. Yesterday's low was 523.38. If it would only need a move below 522.80 to set it up. Now, if that happens today, then the close tonight either over 536.20 or under 527.28 would make it happen, a weekly key reversal. Anything in between and we'd have a lesser outside week. It actually all just depends on how low we go today. US dollar against the Mexican peso. Finally, a seeming move out of this intraday indecision yesterday. The market has been gently squeezed between the overhead flatlining short moving average, currently at 1993.88, with the help of the nearby neckline, currently at 20.0459 of the late February to early April head and shoulders top. Whilst below we have the significant support congestion at 1971.68. Well, yesterday we had a key reversal up and a bullish engulfing pattern, if only just on the latter. The only issues were these. The day was capped by the neckline and prices closed right on the short moving average. For the moment, I'll still keep them further down on the daily chart, the potential targets from this head and shoulders top, and the one from mid-January to late March. In the first case, we have an initial target X1 in the 19.5 area with a full target X2 down in the 1885.5 area. In the second case, we had an initial target X3 in the 1971.70 area with a full target X4 down in the 19 even area. Now, the initial target X3 here has already been achieved. As I've stated, I'll keep these still on my daily chart, but that decision might well be reversed. So far today, a further move higher to test the neckline, basing the action actually on the short moving average. There's been a small breach, but then a pullback. I am mindful of the descending short medium moving average that's just overhead, currently at 20.1370, and the flatlining medium moving average a little higher at currently 20.2201. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Service International Limited. And here comes the final bit.